grab some comments and gonna go find some trades today. So I had a chart alarm go off on AT&T. That's looking pretty good to continue to hold. If you bought some shares with me, I'm looking to hold this towards $27 to $28. Go to the weekly time frame. This has been a kind of a passion project in all AT&T. Strong support back here in 2002. Strong support again in 09. Back here in 2022 and 2023, I was like, well, the value is there. So I've been in AT&T for a while. It's been the last couple of years. And here we are, crossing in the 20s, looking better, have some wiggle room to the upside, and hopefully some open space to continue to rip higher. So overall, it's doing just fine. So there's my AT&T up around $8,300, and hopefully, if there's another, let's say, I don't know, $4 higher, $4 higher at about a thousand shares, that'll add up pretty nicely. So anyway, I like that. I wanted to find a little MSTR action back up to 383. Everyone's having the big debate on whether or not Bitcoin can get to 100K. I wanted to take a look at a trade on MSTR if the implied volatility is high enough. MSTR, IV rank of 58. Coin is okay as well. I've got some 111s. Let me check on some of these positions here. So if I go MSTR right now, so as a whole, I think I'm up like $8,000 or $9,000, up about $8,300 on MSTR. Now that's with zero ownership. A lot of these are just crafted trades. That's a in the money bull call spread that's out for a while. I'm not really worried about that one. This one is a 111. That is a 100 by 95 bear put spread and then a 65 sell put. So I collected some net income on that one, and I'm going to do something similar to that with current prices. I know they're a bit elevated. A 111. It depends on how much lower I can go on the put side. I'd be kind of willing to say we could drop back to like $200, which from current price, that would be like Bitcoin falling 47%. I mean, maybe less. Maybe the what we've noticed here the last month or so is that MicroStrategy has kind of been this leverage proxy to Bitcoin. So as Bitcoin is going up, MicroStrategy is going up higher. As Bitcoin maybe pauses or pulls back, MicroStrategy pulls back deeper. So long story short, let me see where I can get a put level, and I don't want to overlap any expirations here. So I have January, February, March. Let's check and see what these look like. January, February, March. So I don't want to overlap those expirations necessarily. Maybe the January 10th, that's 38 days out. I don't have any expirations there. So let me look at a 111. Let's see. So $200 isn't bad. That's right back to this breakout point. So if I did a 205 by 200 and then I sell, what do I want for income? 175. So the buying power reduction is a little steeper than I want. Return on capital, if nothing were to happen other than me just collecting income, it's $240 for $79.91. Let me make sure that's the right account. So $241 divided by 7,991. That'd be a 3% return in about 38 days. It's not awful. Would I own shares of this? Sure, I could own some shares. I could flip this pretty aggressively. How much do I like MicroStrategy? I mean, I don't mind this trade. If I want to make this a little bit cheaper, move this down a little bit. Now I get 248. Oh, we get $1.97. That's interesting. So I could buy, sell. That's a little bit more buying power. I think that's kind of my sweet spot there. All right, I'm gonna look at this trade, see if I can get filled for the bid ask is pretty wide. I mean, 240 mid price. I don't really want to take less than that. I'm going to try to get, 240 minimum. If I can get 245 or 250, I'll start there. So I'll put this on my portfolio margin accounts. This is a little income play out 38 days. Just grab another 240 bucks. That should pair nicely with the, $2,000 I've got running right now on MicroStrategy. And all I need price to do is basically just stay above 200. So if we stay above 200, there's income on the trade. If you know what, I'm actually that'd be kind of still. I was gonna say I could do this both directions, and I could do basically a 111 here and a 111 here, and collect a lot of premium. But in the event that Bitcoin were to make another rally, that would certainly sting to the upside. So I don't want to do that. Don't want to do that. All right. So I think I'm going to take this trade if I can get filled at let's say 245 to 250. So let's try the 255. 255 is not filling. I'll try to penny this down. 250 is going to be my lowest price that I'll accept. If I can't get the fill, then I won't take the trade. 252. Might as well try 250. You dirty dog. All right. Will I settle for 249? 248. All right. I'm going to change my minimum accepted price. It's going to be 245. If it doesn't fill, then I won't take the trade. All right. 245. Final offer. Not filling. I mean, the price is 256. Come on. All right. I'm canceling that. Any other way I can craft this trade? I suppose if I just did a put, that's actually way more cost effective. I can just do a put, generate the income, get filled at the ask price or the bid price at 237, 180. So the reason I liked the 111 is because I have a bit of a bear trap. Let me see. What if I did like a 250 by 245? I mean, I like that trade a lot more. So if I buy the 250, sell the 245, I can still get $2 and maybe 30 cents of income. It reduces the buying power by a lot, and I still have my put out here at 180. That's not bad. All right, let me try this one again. Let me see if I get 240 for this. 240. Come on, man. 235. Final offer. Son of a bee. 230 not filling. All right, cancel. Well, that's not going to work. Never mind. How about Netflix? I would like to think that Netflix is capable of a pause or a pullback. Let me see what the IV rank is on Netflix. Trading at 8.4 IV rank. That is crazy low. Premium should still be decent on Netflix, but I mean, I don't want to sit here and call the top necessarily. It's an expensive one that I don't really want to do a 111. Let me see. We don't have to get creative here today. If I go ES, maybe out through the Fed. So I've got the hedge on for this week is 60.50 by 60.55. If we stay below 60.50, that is a $2.50 winner on ES. We'll see what price ends up giving us. Just watching the SPY. Anything on NQ? Maybe I can get a nice little 111 going on NQ. check this one out. In Q, let's go out towards pre-Fed, the 17th. So if I went out to the 17th of December, how much wiggle room can I get for kind of a bear trap? Debatable. This would be, could we drop 5% at 20,000? Maybe. So if I were to buy the 20,000 put, go after a 50-point move, how low can I go on that? So let me see. I'm just looking at the buying power situation. So if I buy the 20,000, sell the 19,950, and then from there go to like 19,000. So I've got some profit potential. Only 100. The multiplier's a 2. Man, that's not that good. That's not that good at all. That's a lot of buying power. Never mind. All right, fudge it. Let's look elsewhere. So, what do I like? Right now, I'm gonna look at some currencies. So earnings wise this week, we have a couple of notables. Chewy, I have some exposure on. Let's actually do a spot check on some of these. So we have earnings after market today. We have Salesforce, OKTA. I actually was looking at one this morning, which I thought wasn't a terrible stock. It was AEO, which is American Eagle Outfitters. So let's go Salesforce. So CRM. CRM trading at 330. And let me see something here. CRM. Let's price out some options here. All right, let me get logged in. All right, CRM. So our average move on earnings is about 10%, and that's been pretty darn consistent. 9%, 9.7, 9.6, 12 and change, 10.7, 10.3, 10%, 6.83, 10.3, average is 10. So we have a stock that's $329. We're looking at about a 10% move. So 0.10 times 329, or I guess right now 320, yeah, 329.07. So about a 32.90 move. What's our ATR? Weekly ATR is about $18. Obviously, earnings is a bit of a push on top of that. Okay, and how many times did we at least hit 10% over the last 10 earnings reports? I'm looking for 10%. So let's find out. So if I cut it off after 8 days, looking for 10%, we do not get there. We do get there. We do not get there. We do get there. It's like she loves me not. We don't get there. We don't get there. We do get there. We do get there. We do, and we do. All right, that's not bad. So we actually have 6 out of 10 that have hit at least 10%. We do have to go out 8 days, so that would mean my expiration for CRM would be next Friday. Now the important thing is, can we price this one out enough to like it? So CRM getting some type of kind of overreaction. If I went out to the 13th, let's see, what would a bull call spread look like? If I buy the 330, let me see. Could I take both these trades cheap enough? All right, easy way to trade this if I want to go in the money on a debit spread and try to get it where I can play both sides of it. If one pays over the other, that we make a net profit. Let's see, 329. So they've got market makers expect about a $24 move based on the implied volatility, and we're looking at about $32. So let's say that we go up 30 bucks. It's trading at 330 right now. If I were to, let's go 350. If I buy the 350, sell the 352, they only cost me 60 cents to make $1.90. That's a pretty good trade. And if I did the opposite of that, that's moving up 20 bucks. Let me go down 20 bucks. So if I buy, the strikes are crappy. So that one cost me $1.12 to make 388. And this one would be if I buy the 310 and sell the 305. Let me just take this one off for a second. Delete. So that one cost me $1.28 to make 372. All right, so let's do some quick math. If I pay $1, so on a bear put spread, it's $1.28 debit, and my max profit would be $3.72. If I do a bull put spread, that one I think was $1.20. That would be the 350 by 355. So if I buy the 350, I think this is actually cheaper, $1.12, $1.18. So it's a little bit cheaper. $1.18 debit and 3.82 max profit. So let's say we have one winner, and that one winner is the minimum of 372. And I would lose $1. Let's say I lose the max of that. I could have a net profit of $2 and 44 cents. So I'd make a net 240. I could lose one, win one, make a net 240 if Salesforce is going to move. We're expecting maybe a $30 move, and if it did, half of that. Problem is, if I play both directions, I may not get full profit out of it, but is it enough profit potential to see a net gain on this? I think the answer is yes. We just need to see price really move. So let's debate this for a second. Could we go, if we hit the all-time highs, which I'm pretty sure that is, nope, it is not. It is, okay. So if we hit the all-time highs, that's only around a $20 move from current price. So if we hit the $20 move, we exceed that, we get to all-time highs, fantastic. If we plummet to the downside, I mean, it's cheap enough. How much do I like this trade? That's the question. So do I want to be a buyer or seller of this? Let me come back to this one. OKTA is cheap enough, not cheap enough. Let me go Chewy. Chewy's trading at 34. I do have some shares on Chewy. I'm looking to get this one called away at 37.50. I suppose I might be, it might be worth my time to buy some shares or buy a put. So here's my position on Chewy. Have my shares, have them covered. Chewy is tomorrow morning. So if I just buy some protection on Chewy, let me see if that's going to cost me anything. If I go to December 6th, if I buy like an out of the money, maybe 50 cents of protection, that's a little steep, man. Let me see. If I went out a week and change, I'll buy this protection at 25. Unlikely we're going to get there. We'd have to have a big drop at 25. But if we just have like a huge move to the downside and it kind of shifts around the options, I could turn a very inexpensive. I mean, it's only like a 4 delta. That's way out of the money. Maybe 20 cents. 7 delta. Just deciding. If we don't move to the downside, I'm wasting money here. If we do move to the downside, then I lower my cost basis. I could also roll my call. Just trying to think here. I don't want to pay too much for the put necessarily. I kind of like the $30 zone. This would cost me 40 bucks. This one cost me 60 bucks. 10 delta is not bad. All right, I'll buy this one. I'm going to buy a $28 put. I need to buy 2 contracts. Should be a total of like 58 cents. See if I can lower this a little bit. So 27 cents, 2 contracts, cost me $54. Not filling at 27. Let's try 28. Filled at 28 cents. All right, so I got a little protection on Chewy going into earnings. Dollar Tree, Dollar General. Take a quick peek at those. Dollar Tree. Actually, this one might be okay. This one could be cheap enough to take a stab at it. We've got some gaps to fill to the upside. Let me check on a couple of levels here. DLTR. Okay. Let's go DLTR. Okay, fair value down to 61, showing it's actually still slightly overvalued. Could this fall lower? Yes. Would I have to risk an arm and a leg if I put in a debit spread? Probably not. DLTR. If I went out to Friday, if I buy and sell. So I get 55 cents on the dollar if I'm right. If I go 1 strike higher, 58 cents on the dollar if I'm right. That would be a little bit better than that. If I were to do a bull put spread, collect 55 cents on the dollar for a credit spread. If price goes up, that's a pretty easy winner. 55 cents on the dollar. I guess if I did a credit spread, I could debate on I don't know, would I want to own this? Probably not. I don't know if the premiums are that good. What would a 30-day covered call option look like? So here's hypothetical. If I do a credit spread where I sell the 72, buy the 71, this is showing I could pull in about 55 to 57 cents of credit. So I'm risking less than I'm pulling in credit wise. If price were to go lower, I could still repair this. Probably wouldn't cost me an arm and a leg to repair it. I mean, I'm not making a bunch of money on the credit spread. I'd only make 55 cents a contract. But if I try to repair the stock, let me see what like a 30-day covered call looks like. So if I went out, let's say 30 days and selling at the money, and you get like $6 at the money. Like, it's pretty good. All right, I'm going to take a stab at this one. So if I do the December 6th, 72 by 71 or 73 by 72, see if I can get 60 cents on the dollar for this one. We're looking at a move about 10 bucks. I'll try to get filled. I'm going to take no less than like 55 cents if it'll fill me. I mean, if the mid price is 50, I'm not taking the trade. I'm going to try 60 cents right now. This is earnings on, this is Dollar Tree, so this is earnings Wednesday before market open. And then the other one would be Dollar General. So we got DG. Also, I mean, they're both like the same. Crazy. Is one better than the other? DG. I mean, that looks a lot better in the snowflake analysis. Aha. All right. Well, I'm going to switch my trade. Instead of DLTR, I'm going to go DG. This one fundamentally is a little bit stronger. We're trading at, we have an IV rank of 91 almost. That's pretty high. We're expecting about a $9 move on earnings. Dollar General's earnings are Thursday morning. If I did, let me go out to the 13th. If I sell the 79, buy the 78, same thing, like 55 cents on the dollar. Or if I were to buy the 79, sell the 80, 50 cents on the dollar, it's the same. It's a 1-to-1. Fudge, man. You can't just carve out a little bit of an edge. That's unfortunate. All right. This stock from the peak is down around 70%. Crazy stuff. $79 by 78, 55 cents on the dollar. I'm going to take this trade if I can get filled. I hope I can get filled here. Let's try it. All right, just filled 52. I put in 55, you turds. All right, I got filled for 52 cents, which is not what I wanted, but that's okay. So let's try this one again. Let's try 55 cents. So not filling at 55, 54. I might just have to settle for the 52. All right, 52 looks like it's the trade. Filled at 52. All right, next. There we go. Now that we got the trade. All right, I'll put this in the Pulver alerts here in just a moment. All right, so trade is in. This is Pulver alerts, stocks and options, new trade, DG, 12/13 expiration, sell the 79 put, buy the 78 put, 52 cents credit, earnings on 12/5 before market. Strong fundamentals, considering ownership if price falls lower post earnings. If you don't want to own, look for price to stay above 79 for income play. Okay, I'll take a quick snapshot, go down to the daily. So let's see if we have a little gap fill. All right. And we'll see if this does the trick. So plenty of upside. If we go lower than, 78, I'll debate on if I want to own the shares or not. I'm looking for a gap fill. The other one, if this is cheap enough, I'll look at a call option as well. So I'll put this screenshot in here. All right, so copy that, throw it in the alerts. There we go. All right, Pulver alerts are officially posted. And any other way to trade this? So the credit spread gives me the flexibility that if price goes lower, and this is what I'm interested in doing. If price were to drop, then I may use my long put to protect the downside and then consider some ownership and repair and try to repair this thing for a couple dollars. I'm only doing one contract, so it's not a huge repair, but if I could do, let's say $3 to $5 of net profit, I would consider doing that over like a 30 to 60-day window. If price goes up, of course, then I'll just keep the income at 52 cents. I'm looking to see maybe an inexpensive play would be, what's an out of the money here? I mean, we're only expecting about a $9 move. If I were to buy like an 85, I don't know. I don't want to spend $3 on it. It's like that's my risk. If it doesn't go up, I'm screwed on that call option. So I'm not just going to buy a call option. Um, if I were to buy, we're expecting a $9 move. Let's go 80. If I buy the 85, sell the 86. I mean, that's not a bad play. Cost me 20 cents to make $80. So if price were to hit our expected move closer to like $10, we could see that, 20-cent debit turn into maybe 60 to 70 cents credit, which is pretty good. Our max credit would be $1. So if we turn this into a win, that's just a cheap way to play it if it goes lower, or if it goes higher. So this is an inexpensive way to play a debit spread. The credit spread gives me the flexibility in case price goes lower. This one, you would need price to go up towards the higher end of the expected move. If it did have the $10 move, then you'd be totally fine. This would push price up towards like $89, and you're paying 20 cents to make $1. So you walk away with 80 cents. That's a pretty good gain. What is that gap fill right here? We come back into, $88. We come back into this gap fill at $97. If there's somehow a kind of a big surprise here. I don't mind that combo. Let's see. I'll try it. 85 by 86. Now it's 26 cents. I thought it was 20 cents. All right, never mind. All right, I'm just going to stick with the credit spread on DG. Call it good. So DG, I like that stock better than DLTR. Fundamentally, it's a little bit stronger. They're similar on the price styles. And I do have a nice little level at $80 that I'd be interested in seeing if it gets filled this week. But I like the credit spread. I'll stick with it. Okay, so that's DG. Anything else for earnings this week? That puts me on Thursday if I trade Dollar General. Foot Locker, Campbell's, Hormel, Kroger, DocuSign. Oh yeah, Lululemon. Let me see if I can get a trade in this one. Lululemon. Let's try a little 1-1-1 action on this one. Ivy rank is 72. Is this a stock that I want to own? Not particularly, but if I could own shares back in the 200s, I would consider if I can get an income play here. So let me have a look. So we have earnings. If I went out, let's say 38 to 45 days on this one, and I'm talking about 200 bucks. Man, there's not even a bid price there for the put. Well, obviously that's not great. I don't think this is going to work. I'm gonna have to put the order somewhere in here. I was looking at like a bear trap opportunity. Try to take ownership at like 230. Yeah, I just don't get any income for it. Hmm. Don't love it. Never mind that. They have earnings on Thursday after close. DocuSign. Head and shoulder measure move. We almost got there. Anything else on DocuSign? Not really. What's the Ivy rank? Okay, this will be the last one, and then I'm gonna switch over to some currencies. Ivy rank of 60. Okay. Fundamentally, earnings forecast declined by an average of 46% per year. It's probably not great. Price to earnings, price to sales, not bad. Fair value, it's got some room to the upside. 16 and a half price to earnings versus peer average. Oof. So it's kind of cheap compared to its peers. We've had a good breakout to the upside. Could I do anything here at this neckline? $65 neckline on DocuSign. $65 neckline on DocuSign. Again, premiums just aren't that great. Sell a put. Do I like it that much for 60 bucks? Not really. I don't know. All right, let's switch it up. I'm gonna get some currencies. I feel like I'm forcing trades here, which I don't want to do. Um, I've got some hedges. We'll watch and see what happens this week. Um, News wise, I mean the big ones this week. We have non-farm payroll on Friday. I'm looking to see if there's any outlier levels on the QQQ or the SPY. Right now, things are still pretty quiet. Next week is going to be pretty interesting. So we have non-farm payroll this week on Friday. Next week we have US CPI, US PPI, and we have 3 rate decisions. We have Bank of Canada, Swiss National Bank, and European Central Bank all next week. So Forex could be a lot of interesting going into next week's trading. Let's just do a spot check on some of these currencies. I'm still long Aussie CAD. Plan is to take it back up to this resistance around 95. I'm still scalping my Aussie Swiss. I'm holding a long core position, but I'm scalping like every time we kind of test these levels. I'm just looking at these little like 20 pip winners. Yen pairs. I'm staying out of the yen, but I'm wondering if there is another kind of like seasonality move on the yen. Maybe, maybe not. Just keep an eye on it. Just don't like over leverage on the yen crosses. Aussie New Zealand, just not in a spot that I like. I think I mentioned this one earlier this week. If we come back down into some support, I wouldn't mind scooping some up. If we come back under resistance, I wouldn't mind selling it. If this is just going to be a channel trade, we'll see. Maybe something like that. But I would love to see some type of topping pattern to just trade a range. Just don't have it yet. Aussie dollar, I'm scaling into the longs. Looking to buy in at these lower levels, 64, 63, and 62. Willing to take it all the way down to 6,000. So those are pending orders on Aussie dollar. That one might be filled by the end of the year, and I'll hold on to that going into Q1 of next year. CAD Swiss still scalping and holding long for some positive swap. CAD yen, Swiss yen. Swiss yen I'm actually short on. It's up a few bucks there, up about $112. And I'm just going to measure this move. So let me go. Where's my rectangle? There we go. So high to low. So high to low. And Look at some potential symmetry. So if we hit the lows back around 165 or 163, I'd be okay with that. I'm going to set a chart. I'm here around 164.50. And that's going to be a good enough measured move. So that means if we go high, low, lower high, lower low, good enough. Now, could that be like this bigger top in this currency? Yeah, maybe. We could have a channel working our way lower. We could have, bigger trends, all this crazy uptrend that we've seen for years and years and years on the Swiss yen. I mean, this is no joke. I mean, look at this thing. Going back to 2020, the Swiss yen has gone up 7,100 pips. Wow. And this is kind of the first real, pattern and pullback that we've seen outside of a little correction back in 2022. Crazy stuff. So anyway, I'm currently short on this currency pair. I'm just going to hold it towards symmetry. I didn't get it aggressive as I initially was going to, just because it is the yen. So took off a little bit of the trade size. Eurowazi, anything here? No, stuck between a couple levels. EuroCAD, I'm looking for a sell opportunity. I just don't trust the correlation right now with like the oil prices like sitting at those lows and peppering those lows. If oil ends up breaking lower, I don't see the CAD getting too much stronger. I'm also still long dollar CAD, so Euro CAD I'm just going to stay out of for right now. Euro Swiss, I am just holding Euro Swiss long and looking to see if this will eventually hold support, get on the right hand side of this and start to make its way back up towards 99 or 1.00. There's a big pocket all the way back here. So just holding. Euro pounds. Hang on one second. Okay, Euro pound. I am just slightly under break even on the Euro pound. I'm holding long on this one. I actually like the technicals on this. So we go back to kind of post Brexit. There's some inefficiencies here where I've got a stop loss just around this. Okay, should do the trick. Had to let this guy in. Speaking of letting guys in, what up, man? All right, we're good. Okay, so back to 2016. I'm long Euro pound to see if this support level from 2020 and 2022 and 2024, if we hold, hopefully we have a little bit of a push to the upside. We'll see what the ECB does next week. Euro yen, no trade. Euro New Zealand stuck between a range. So, I would buy Euro New Zealand around the 74 handle. I'd look to sell it around the 85 handle. Killing me, Smalls. Euro dollar. Euro dollar hanging out at 105. Let me ask, who's short Euro dollar or who's long Euro dollar? Does anybody do anything on Euro dollar? I don't know if we have a official top yet on the dollar index. I talked about this yesterday. I'm just saying, be a little cautious on like calling the top. I mean, I could see the dollar still being a little choppy in here through the holidays. We do have an ECB rate decision next week. We still have the Fed on the 18th. So, I mean, I'm still looking for a topping opportunity on the dollar. It looks like a pattern right here if we don't invalidate this high, but that pocket is right there. So I could see price, kind of testing and um, I don't know, being a little tricky at these levels, but I'm still going to look for a topping pattern on the dollar index. Worst case scenario would be that the dollar comes all the way back up here, which I think that's doubtful. So anyway, euro dollar. I didn't mind looking at some buys around the 105 handle. I just was a little shocked to see that was a really nasty flush through the 103.30. That's a nasty spill from pretty strong support around 105, and that those PMI numbers and probably a bit of a liquidity flush all the way down to 103.30. Anyway, long story short, I think, well, I'm just going to say wishful thinking. If the euro dollar is going to retest this level or come into parity, I'm really interested in buying anything like parity and lower, like this. I would love an opportunity to scoop up some euro dollar long. I just don't know if this is going to be the bottom, you know. So if that level holds, then I could definitely see a high to low. We pull back into like 107.50 to 10800, and this is just support. This is resistance, and the dollar ends up going back into a range, and the euro dollar also ends up going back into a range. So Godspeed if you're holding. I'm going to kind of hold out and wait for a bigger opportunity where I'd be willing to hold this thing for like months at a time, but probably nothing right now. So we'll see. Just don't look. I'm just telling you, like, I'm not calling the bottom here. So don't be surprised if we have another flush lower where it's here, a little bit of indecision, maybe pulls back and gets everyone excited around 106, but all this acts as resistance, and then we have another flush lower. So if we have another flush lower, I'll be looking at oversold conditions, looking to see if we bounce off parity. Then I'll start looking to scale back in euro dollar wise. So I don't know. Maybe it's a big trade opportunity for 2025, but something where I'm not really wanting to call like the top or the bottom on the dollars right now. Pound Aussie range bound, pound CAD no trade, pound Swiss I'm long, pound yen. It's a yen pair. Be careful. Pound New Zealand's still range bound. I do like the pound New Zealand. If we come back to resistance or we come back to support, interested in buying low or selling high. Just keep an eye on this one. If this structure, let's say we pull back in here, pop back up to the upside, there could be a little bit of a breakout coming to retest those highs. So maybe something in the interim if you're watching. Pound US dollar. I did take a small buy trade on the pound US dollar. It didn't fill me at my second level. Or maybe no, that's my net position. Sorry, so that's my net position. I'm upside down a little bit. Um, I'm long pound dollar right now, off of the daily trend line plus the what I was hoping for was a below the 200 EMA, back above the 200 EMA, and then just a little correction back into this pocket here. So like I said, there could be wishful thinking. The stop loss is there, so in case it does go lower, I'll get out of it. But we'll see. New Zealand CAD still long on this one, looking to get back towards 88. New Zealand Swiss scalping. Every little pullback and 20 pip scalp, that's fine. Plus, I'm holding to a symmetry swing at 55. I'd like to say I'm going to hold this one towards 6,000, but we'll see. If we have this low, so this low to this high, that's my measured move towards symmetry. If that's a three wave, there could be a 4 and a 5 that gets me back up towards like 58. So I'll keep an eye on these measure moves for some of these Swiss crosses. I'm still holding these. It's been a long time, man. This is kind of annoying thing. If it wasn't for positive swap, I would be way more frustrated on these Swiss pairs. But I've actually generated a decent amount of capital profits just by having positive swap. So I'm not saying that's fun because I've had 2 years of basically zero profits other than swap. So we need to see something new happen on the Swiss crosses. Hopefully, the Swiss National Bank will stay neutral to dovish, maybe cut more rates. We'll find out. Depends on their inflation situation. And New Zealand dollar, currently long on this one for some open space. This is not the point that I'd say there's a bottom, but I'm testing there and there and there. So I'll test the levels. We've got some multi-year support on the New Zealand dollar, similar to the Aussie dollar. I do think that the Aussie dollar and New Zealand dollar will behave differently than the euro and the pound. Against the dollar, Aussie dollar versus New Zealand dollar, if we have risk appetite and we have some positive flows out of China, we typically see risk appetite favor the Aussie and the New Zealand dollar over the US dollar. I think those would probably behave better than holding, euro dollar long or pound dollar long. But just going to watch. Dollar CAD, I'm still long. Trading at 40.71. Hopefully, we'll be revisiting this like 4,200 level soon, going all the way up towards 45 or higher. Dollar Swiss, I'm still long. Going to hold long towards 92, looking at dollar cost average in. Dollar yen. I don't know. Follow your short-term alignments. Perhaps this is a high to low. I'd be surprised if this is a lower high to lower low. I wouldn't be surprised to see this. There's a high to low, and then we go here and here and here and here and here and here. I could see the dollar yen doing something like that before we have a bigger move one way or the other. So just be careful. Trade your short-term alignments. If you're trading the yen crosses, you got to follow alignments and kind of scalp. I don't think there's a big position trade here, and it's also a uh, massively expensive negative swap. If you're holding, dollar yen short, it's a negative swap, like pretty bad, and the brokers will make you realize that pretty quickly. So that is what I'm trying to avoid, is getting stuck in a negative swap position. Okay. All right. So updates for today. New trade on Dollar General. Still have the hedge on ES this week. I looked at MicroStrategy, didn't love it. Coinbase, same type of thing. I've got some income plays. I'd like to get something on like a Netflix or even some of the Mag Sevens. I have some ownership of Apple. Oh, you know what? I didn't roll that. I'm going to look at a roll today. I'm going to try to roll Apple up, either out another week or so, or just let it get called away. I only have 100 shares or 200 shares of it, so I think I'll just let it get called away and make the $6 or $7 profit. It's fine. That expiration is 12/13. So I own the shares at 223. They get called away at 230. I know the stock price is up to some fresh highs, but I capped it. It's still an income play at $600 to $700. Amazon trade up to 212. Also fine. I do like the stock a lot. This is one of my, I'll buy it forever type stocks. Google, have some debit spreads in this one that are looking pretty good. I don't mind actually going out longer term. Let me see here. Let me go like a longer term. What would a 111 look like on Google? If I went longer term, let's go into maybe April or March. Do I get any premiums? Where would I like to own Google? 147 is not bad. That'd be a decent discount. So that would be a 23+% discount. We have lows from March of this year. Let's see. Anything in the 150 handle, I'd be okay with. 150. Nope, it's not going to work. If I just did a ratio spread, maybe just a ratio spread. So the 150, a little bit of credit there. Let's see. Do I like it enough? I'd probably want to make over $100 on at least a credit play. 127, own it at 150. I take the break even at 140. It'd actually be below that low. It's not a bad spot. All right, let me think about this one. So what I'm debating on is if I put in a bit of a bear trap or ratio spread, I could do a 155 by 150. That gives me $5 if I see price dropping, so I get $5 of profit. I also get $1.27 on the ratio spread itself, so that's $6.27 off of the ownership price of 150. Means I can own the shares for 143.3, or actually .73. 143.73. What type of discount is that right now? 143.73 would be around a 15 to 16% discount from current price. That would be 143.73 would be about a 25% discount from the all-time highs. Are we going to face a big deleveraging with Google? I guess the only outlier would be like if these government probes and antitrust things become so problematic. I mean, it's been in the past. I mean, Google's dealt with that forever. So has all these Mag 7 stocks. Anyway, I like this trade. It doesn't take up a ton of buying power. I don't mind owning the shares. I'm going to take this trade. This is a 155 by 150. Fill should be pretty straightforward. Let me see if I can get 130 for it. $130, not filling. So let me replace this one. Try to get a buck 29. 28. Bid is 20, or mid is 27. Filled at a buck 27. All right, I don't mind that trade. Buck 27 there. Okay, let's get these in. $1.27 got filled on one account, maybe $1.26 on others. All right, $1.26 got filled. $1.26 got filled. What the hell? All right, I got to check on that one. That has 0 buying power, so I got to check on that one. And let's go. Okay, so that's added in. New trade. Post this up and I'll let you go. This is a 3/21/25 expiration. Buy the 155 put. Sell the 150 put. And that is a $1.26 credit. Ratio spread. Willing to own Google if price falls below 150. Break-even price of ownership is 143.74. Okay. Adding that in. So this one is 3/21 expiration, 155 buy put, 150 sell put. $1.26 credit. We'll need to own. So down here at this low, as long as price stays above that, that's money, money. pretty low risk, discount of like 27 to 30% on a stock that's, I'd say, pretty solid for the portfolio. I don't think anyone's going to complain about, moving into 2025. I mean, having some energy exposure up to the okay, that was pretty good. Having some energy exposure. I mean, we're seeing Microsoft get it into the space. We're seeing Google get into the space. We're seeing like, nuclear power plant talks and AI infrastructure bills and all this things. Like big tech is getting into this space, which I think is really interesting for, a future play where it just keeps these stocks like pretty darn steady. All right. So that screenshot is getting posted now. Okay. New trade on DG, new trade on GOOGL. Pulver alerts posted. Pulver out. All right. Thanks, everybody. Have a good rest of the day. We'll see you tomorrow. Bye. Or not. We can keep going. New Pulver alerts posted. I'm typing in the chat right now. In A1 trading Discord. Got it. So DG and GOOGL. Update my tracker. $321 expiration. DG is credit spread, 79 by 78. Credit spread. That one was 52 cents on the dollar. $155. Buy put. Okay. Google's in. DG is in. Spreadsheet updated. Pulver alerts updated. We'll take a crack at it again tomorrow. All right. That'll do it for me. Thanks for being with us today. And keep those chats and comments coming in. Keep an eye on Discord. And we'll see what we have for earnings today. Aftermarket, we have Salesforce, OKTA, Marvell, Pure Storage, Innovative. Yeah. I mean, the ones notable to me is Salesforce and OKTA. Those are the two that I pay attention to. I like Dollar Tree and Dollar General, but fundamentally Dollar General is a bit more sound. So I'd rather consider owning or repairing there. I didn't find something I liked on Lululemon. I'm up in the air on, I bought a put on Chewy just to make some protection on the shares that I own. Otherwise, if Chewy goes up, I might look at rolling again and trying to grab a few more bucks. I'll get Apple called away in a couple weeks. This week, non-farm payroll coming up. So we'll talk more about that. And we'll just keep plugging away. All right. Thanks, everybody. Have a good rest of the day. See you. Bye.